and go ahead and get started. And we thought it would be a good thing. Linda obviously sits through closings and gets questions on the closing disclosure. And I, Sarah Steadfast, as the mortgage company representative, we get closings on the closing questions on the closing disclosures. So we thought it would probably be a good idea to just bring some of those questions to light to give you some ideas about what you can expect on your closing disclosure and some of the questions that you can and maybe shouldn't ask at the closing. So Linda, do you want to start off with well, I'll tell you what, I'll start off with the first one.
Okay.
Because often I get that question, how is the agent going to get a copy of their closing disclosure? And the answer to that is technically we as the lender and Linda as the settlement agent is not allowed, we are not allowed to give the closing disclosure to the agent. So the fastest way to get it is to ask the buyer to forward you a copy of their closing disclosure as soon as they get it. Do you have anything to add to that one, Linda?
Yes, and they should always have that closing disclosure statement, at least the preliminary one, as close to final as we can get it, 3 days prior to closing. So they should have that preliminary one 3 days before closing, and that way you can start reviewing it. And then you can start asking your questions. And when you get that buyer's closing statement, it does not have any of the seller items on there. And some mortgage companies are putting it on, but there will also be additional ones coming on the seller closing statement, which is a combined one. But you should be able to start 3 days prior to closing.
And is that the same rule for the sellers, that the seller needs to get their CD at least 3 days before closing?
No.
Oh,
it's only the buyer.
Got it. Good to know. Good to know. Also, one of the things that NewTowne Mortgage does is our policy is to actually get the closing disclosure out, as Linda said, as close to perfect as possible, 5 days before closing. So you actually have a little more time to review it. It doesn't always get out 5 days in advance, but that is one of the things that we strive really hard to get it out as early as possible so people can review. All right, number 2, why don't you take that one?
Which one was the number 2? Because I don't have it.
Check CD for all owners.
Okay, yes, okay, I've got all that. When the closing statements come out, you want to make sure that the buyer and the seller are the right people that is on that closing disclosure statement, because that's who we're going to be doing the title searches on. And when we find to start doing those title searches, what you had on your contract, a lot of time that's really not the actual seller. So always be sure you're checking those tax records before you write the contract so that it'll fall through all the way through. And that really gets important when you're looking, do you have one seller or 2 sellers, or if you have an estate, because that's what's going to follow through on these closing disclosure statements until we finalize the title search.
Right, and I think that's one of the things that we think about the title company or the settlement company doing a title search on the property, but they are also doing searches on the parties to the transaction. And we as the lender are also doing what we call a fraud check to make sure that the people we have are really the people who are supposed to be buying the property and selling the property. And I think that probably a little aside here is something that you could probably address, Linda, is the trust situation, that if any part of the property is in a trust.
Yes. If for a seller side, anybody on the trust, we have to have all the trust documents. Now, if you're going to put a buyer, they want to take title in their trust, the lender is going to want to see all of the trust documents, start to finish, complete, not just the affidavit saying they're in a trust. And we also need that on the title side because we have to make sure who the actual trustees are and that the trust is valid. And that they have their TIN numbers, because we have a lot of times, even on the seller side, where they have set up a trust, but they do not have a trust bank account. But when we issue their proceeds check, it will be issued in the name of the trust. So they will have to go acquire a bank's account so they'll be able to cash their funds. We can only pass the checks over to whoever has title.
Good
Linda,
point.
let me ask a question on that, because you said something at our sales meeting the other day. How long does it take to set up a trust and get that all established? Can I like do that first thing in the morning and close that afternoon?
No, because you have to have everything cleared through the State Corporation Commission. Now, you don't have to have the TIN number. You can still use your social security number, but you have to have all those documents. And there are a lot of the documents are online if they get them all completed. But I would say it's going to take you a couple of days for all that to transpire, because you do have to get it registered with the state.
So if I'm working with some clients and they mention trust, my ears should go off and I should start doing some conversation with you or whoever's Heather, she's doing the closing, to make sure we getting it done in the timely manner. Correct?
Correct. That is
Not,
correct.
not the morning of. It's
Correct.
okay.
Correct. And we will know if it's in a trust. Now, on Sarah's side, we have a lot of buyers that all of a sudden we're ready to go to closing today and they go, oh, no, we wanted this in our trust. Well, that's not going to happen, because the lender then has to run the trust and start all of the documentation over, because it changes everything for them also. So that's got to be done ahead of time.
Yeah, and I think we also, we added on this list here that adding owners after closing negates the owner's title coverage.
Yes.
And the lender also in their notes have something that's called a due on transfer provision. So if we make the loan to the borrowers in Mr. and Mrs. Stone's name, and then they decide to transfer it into an LLC or into a trust or something after closing, it could actually cause the loan to be called. So it's very important that we have all this information correct up front. But like Linda says, if suddenly at closing or the morning of closing, they say, oh, we want to put this in this trust, don't let the settlement agent talk you into just, oh, we'll just transfer it in there after closing, because that is not an advisable thing to do.
And that happens even if it's not a trust. If you have a husband and wife and they don't want to put the wife on, or they have a girlfriend they want to put on, depending on the type of loan, you can't just add them after closing. You know, there's a lot of restrictions on the loans of having to do that. And yes, they can do a quick claim deed, but they are going to lose their title insurance coverage the moment they do that.
Right, right. And that's one of those little things that we think sounds so simple. It's just like you say, that people think it sounds really simple to say the morning closing. Oh, by the way, that's not a by the way, that's a everything has to stop and we have to fix it before we can close. So then that kind of brings us back to powers of attorney. As far as the lender is concerned, we have to review a power of attorney. And Linda, you also need to know about the power of attorney.
Yes, and it has to be specific, and everything on that has to match what the lender's documents are going to be. And as soon as we get it, we have to get it over to the lender for them to approve it. And it's even different when you have the VA power of attorney, because they have to have that veteran doing alive and well the morning of closing, so that we know that they're still alive and well. And that is always a condition. And sometimes that's kind of difficult to do. So you want to work on, if you're going to have anybody signing by power of attorney, you must work on that ahead of time, so that we can get that done. And there are some loans that they will not allow a power of attorney. So, but they always have to be specific to the property. And whoever they give that power to are the only people that can sign the documentation. And just for you as the sales associates, you cannot be a person's power of attorney, nor can I. It has to be a third party.
And let me
And
throw
for
in
the
there from the,
sellers, I'm sorry.
I was
Go
going to
ahead.
say, I was going to throw in there from the agent's perspective. So
Yes.
it doesn't sound like it's an infomercial for Linda. If you're going to be using a power of attorney, you should have Linda or Heather, the closing entity, draw up or give you that power of attorney. Don't rely on the military power of attorney by the JAG office, because most of the time, the JAG office that's out in California will be drawing up a power of attorney that works for that entity or that municipality out in California, not here in Virginia, Norfolk, Virginia Beach, etc. I don't think they still do it, but I remember once upon a time where Virginia Beach required all powers of attorney still be on 11 by 14 pieces of paper. And I remember Linda telling me that they were taping powers of attorney to 11 by 14 pieces of paper for the city to accept it. So please make sure you're getting the closing entity, Linda, Heather, to draw up that power of attorney, or at least give you the documents so that you're using that, not the one that's coming from the JAG office.
And Holly, also always must have the original. It cannot be a copy. And that's the same thing for your sellers. It must be an original power of attorney. And I know there's a lot of people that have a heartburn with that, especially if you're dealing with somebody that has dementia or where it's a general power of attorneys. Those have to be approved. They have to be recorded, and then we can return them back to the sellers because I know they need those. But for the buyer, that goes to the lender because it was executed with the deed of trust, and you won't get that back.
Yeah, and just one other thing on the powers of attorney also, that you cannot use a power of attorney to sign the contract and sign the loan application and do the closing. So if you know that somebody is going to be gone during the whole transaction, that original contract needs to be signed with a wet signature, or the loan application needs to be signed with a wet signature by the person who's not going to be there at closing. And that, when we also quick to hit click, 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 agree to the terms. And that is one of the terms of using e-signatures on contracts, is that everybody understands that not everything can be done via electronic signature. And somewhere in there needs to be a live wet signature. All right. Oh, go ahead, Tim.
It wasn't me. Someone has a question.
Oh, okay.
Just real quick, does this apply to family members as well?
Yes. Well, does what apply? That if you're going to be the power of attorney, you're the real estate agent, you're going to be the power of attorney?
Correct. If my mother is getting elderly and she can't take care of herself, and I'm her power of attorney, does this apply?
I would say that you cannot represent her as the power of attorney and the real estate agent. But Linda, Tim, what do you think about that?
That's correct, unless you're the owner of the property. Now, if you're the owner of the property and with your mother, then that would be fine, or you're the owner of the property with your spouse or whoever. If you're one of the owners, you could do it, but not as someone who's not an owner. And the other piece, I'll just let you guys also know, if you are the owner of a property and the seller, our E&O coverage does not cover you if you're list agent number one. So if you're the owner of a property and you're attempting to sell it, you cannot be list agent number one and have E&O coverage. If you're the buyer, I mean, what are you going to do? Sue yourself? And that's because that's where most of the lawsuits come from. But yeah, just from that perspective as well, just to throw that out there while we're kind of in that realm.
Good to know. Good to know. All right, I'm going to slide over here to the closing disclosure, because I think the next few items kind of talk about what's going on the closing disclosure. So first of all, when you look at it, you want to check to make sure the title company or the settlement agent is correct, that the property address is correct. You would be surprised how often there's missing a north-south directional types thing, or their zip code is wrong, or the street address could be wrong. And most of us are on electronic systems now, so when it goes in the beginning incorrectly, it's incorrect the entire way through. So these are some of the things to double check. Sales price, of course, you want to have that. And as we talked about, the parties to the contract, Michael Jones and Mary Stone, and Steve Cole, Amy Doe, the lender. You may not be completely familiar with the term of the loan and what type of program it is, but those are the kind of things you want to look at. Here we have the loan amount, the interest rate. This is just the principal and interest right here. We then go down and it talks, whoops, powerful mouse here. Does it have a prepayment penalty? Okay, most of our loans do not have prepayment penalties, but this is where you would look to see that. And right now we don't even have loans that have balloon payments, so that's not there. This is actually an adjustable rate mortgage where it will show principal and interest, and then it's got mortgage insurance and estimated escrow. The mortgage insurance in this example is only on the property for 7 years, and then it falls off for years 8 through 30. Sounds like we've got some jets, an Oceana or something. Estimated tax and insurance estimates. Here's the big number right here, cash to close. That's the other number that, of course, everybody wants to know. How much money do I need to bring to closing? And as Linda said, we tried very hard to get this exact as possible, but it certainly can change. The CD, when it comes out 3 days before closing, is not yet gospel. So then on the next page, we've got the loan fees. We've got the what we call services that the borrower did not shop for, appraisal, things like that. And then we get down here into pest inspection fee, survey fee. And I know Linda is always a proponent, as are we, of getting a survey. I can't imagine we could ever get a survey for $85 these days. I think they're what, $400 to $500 these days, Linda? Linda?
Linda got muted because of the jets.
Oh, okay. Yeah, so go ahead, Tim.
Okay.
Go ahead, Linda.
Surveys now are probably $500,
Okay,
$550. And if you get into a larger lot, or if you get in where there's pools and a lot of outbuildings, they're also adding more to that. So the minimum that you want to tell people is $500.
good,
The
good.
forms have gone away.
Okay, good.
Sarah, do you
Good.
want to go ahead and tell people about quote junk fees and where they would be? So if you're doing a second opinion, their clients can take a look, or where the agent should be aware.
Yeah, so junk fees are either going to be up here in origination charges, like this particular lender has what they call an underwriting fee. And this is where you're going to see a lot of the junk fees, unless they're a third party fee for like a flood determination fee or a flood monitoring fee, tax service fee that they pay to a third party. So in section A and section B, that's going to be where you're going to find fees that may not be, that may be, as Tim calls, we like to call them ancillary fees instead of junk fees, but you do want to watch this, particularly in this market that we're in right now, where you'll have lenders say, oh, well, I've got half a discount point on that, and you'll have your buyers shopping for a half a discount point, and then you find they've got another thousands and thousands of dollars worth of fees in one of these two sections. So it's really important to check that also on the closing cost estimates that you get up front when your borrowers are actually shopping for the rate. So good point. Thanks, Tim.
Yeah,
Oh, and I also want to mention at that point too, if it's a brokered loan, you have the original lender, but then you have a broker who, as the person that you've been talking to, they also have fees that get added on as what we would call junk fees.
Very good point.
Yeah, because the brokers are out there.
Right. So they may say, yes, we're at 4 3/4 with 0 points, and then you'll find all these other fees hiding there in these sections.
I think this is the time right now with the interest rates in the market that it's very important that the agents are stressing to their clients that you get a second opinion, right? If you go to the doctor and the doctor says, oh, you have cancer, most people are not just going to say, oh, okay, I got cancer and I'll do whatever you say. Most people are going to at least get a second opinion to verify that they really do have cancer and it's not just some kind of blemish or lesion or something like that. So with the way these fees are, with the costs that are exceedingly increasing, what Sarah just said, the bond market dropped again this morning. It's so very important and valuable that you educate your buyers to the cost of doing business and have them get a second opinion on these cost factors. Because it's not just the rate, it is also the fees that they're going to be charged for the rate. So it's so very important that you as the agent are really being open and honest with them. And they're like, oh, it's my best friend. They wouldn't take advantage of me. I've known them since grade school, this, that, and the other thing, which is fine. But the fact of the matter is you still want to make sure you're not paying an exorbitant amount of money to get this loan up front, or even on the rate.
Yes, and at NewTowne Mortgage, we're offering the second opinion. Basically, it's for an approval, but absolutely, it's a great point, Tim, to compare the fees as well. All right, so Linda, one of the things that we also discussed was looking for the termite charge and any relevant repairs. And sometimes it's on the buyer's side, sometimes it's on the seller side. Make sure the termite report has been reviewed for repairs or damage. So I know we've got the inspection fee here, but the repairs, I believe, go down here at the bottom, don't they, Linda?
Yeah, now it'll all go down in the H section. Usually it shows up in the H section, but you need to make sure you're reviewing those termite letters when they come over to you. You might see the box that's checked okay, but then there's going to be some terminology that has been typed in there. And if you see anything that says the word damage, or if they say it's nothing has to be done, that means treated. But if you see anything that says damaged on there, the lender is going to be looking for a bill to make sure that that damage has been repaired. And that's very, very important. And, you know, those termite letters are good, I think, still for 90 days, if I'm correct. So you should know way in advance if you've got a clear letter or not. You can have a clear letter, but you still may have to have some repairs done because they wrote damage on that letter.
Yeah, and I think something that we don't come across very often is the well and septic, but there are still properties in our area that require well and septic. And typically when a septic or a well and septic report is required, that's another thing that needs to be looked at. It was not that long ago that we had one and we said, oh yeah, well, we've got the letter. And we looked at the letter and the letter said 5 of the 20 fields, the distribution fields into the septic field were working. So 5 out of 20. And so then we went back to the septic company and said, well, are 5 outlets into the septic field sufficient for a house of this side? And the guy said, well, yeah, only if you had one person living in the house and it was a 4-bedroom house. So then there were $46,000 that had to be spent to get that septic field redug and revamped. So it's well and septic, something to really watch for on your listings should something like that come up.
Yeah, and they're very costly and it takes a long time to get the permission from the state and from the city to get those septics installed. It's a whole different market now on that.
Exactly, which is another reason for having a survey, because the septic system has to be a certain distance from the house and it has to be a certain distance from the well. And surveys typically will show the location of the well and the septic field. So just a whole nother great reason to have a survey, or at least be able to see the seller's survey.
Right.
All right, Linda, how about PICRA and walkthrough items?
Yes, it's like I've got a problem with one right now. The PICRA, you must make sure you always give the closing agent a copy of the PICRA. Everybody seems to have a habit of, if there's a problem, they'll write, well, the seller's going to give an additional $2,000 in closing costs because the seller isn't going to do the repairs, or repairs are going to have to be done at a certain time. If you don't share that PICRA with us that shows all those additional charges on there, it's not going to follow through onto the closing statement, and we can't have it at closing. Because if you said, well, in lieu of all repairs, the seller is going to pay $3,000 in closing costs for the seller. Well, that also then has to be given to the lender and the loan has to be re-underwritten because of that additional monies going to the buyer. So we need those PICRAs way ahead of time. And I know a lot of times we don't get them with the original contract, but the minute you change things to the terms of the contract, please get us the PICRA, and it also must go to the loan officer. And also make sure when you get this closing statement, you review it to make sure we also have inserted that, the cost of that, like if you put a home warranty. If I didn't have the PICRA, I wouldn't know there was supposed to be a home warranty, and then we've closed, and then there won't be that warranty. So please share the PICRA.
Yeah, and I just, Linda, you touched on something that if you go to the walkthrough or you get the PICRA and the determination is made that rather than the seller having the repairs completed, that there's going to be $1 credit for those repairs, that's pretty much a no-no. So as Linda said, it can be used as a seller contribution towards buyer's closing costs, but there can't just be oh, here's $2,000 because we decided not to fix the water heater. So it's important that we're using those for seller closing costs, for buyer closing costs, which right now is not too bad because sellers really aren't paying closing costs. But when you've got a seller paying all the closing costs that can possibly be paid for the buyer, then it's definitely a time where the seller needs to fix whatever that item is prior to closing. We don't like escrows, do we, Linda?
No, we do not do escrows. And if they say they're going to pay for some repair, I don't want an estimate. I want what the repair is going to be. Like if they're going to pay for carpet or something like that, I need a bill, not an estimate, and I need to know who it actually goes to. But I know that, but because if they're going to do something with painting or something, I need the bill. And then if the lender asks for it, I can give them the bill. Because
And then you're going to pay it from the seller's
I'm
side.
going to pay it from the seller's side, and it's going to be like an actual bill.
Correct.
No
Good.
estimates and no escrow.
Good.
Hey, Sarah and Linda, before we move on from this section, right above it in section G, there's a good half dozen or so newer agents on the call. They may not understand what that aggregate adjustment on G08 is. You guys want to explain that one for them?
Right. Well, as the lender, we are allowed to escrow 1 year plus 2 months for our homeowners insurance premium. And we're allowed to escrow, depending on the region, whether the taxes are paid quarterly, semi-annually, or annually, we're allowed to collect 2 periods of taxes, or enough for 2 months of property taxes. So sometimes we exceed that. I don't know that I've ever seen an aggregate adjustment of only 1 penny, but sometimes it looks substantial, and it kind of depends when the taxes are due or when the insurance is due, so that can, and typically it's because of taxes, isn't it, Linda?
Yes, yes.
And it's all because of when the taxes are due. So for homeowners insurance, for example, we're going to escrow 1 year plus 2 months. So today is April the 15th. If you were to close on your loan today, or your buyers are to close on their loan today, their first mortgage payment is not due until June. Wow, it's already that far along, June the 1st.
Yeah.
And so next year, we're going to get a bill from their homeowners insurance for another 12 months worth of coverage. And if we didn't collect those extra 2 months, we'd be short 2 months when we got that bill. So that's why we collect the additional escrow amounts. The other thing about escrows is that each year the lender is required to do what they call an escrow analysis. And so if the taxes went up, or the homeowner's insurance went up, or they suddenly figured out the property that is now in a flood zone or something of that nature, that escrow analysis is going to be conducted, and it will make adjustments. If you own a home, you've probably received a bill, and your bill usually doesn't go down. But with an escrow analysis, they'll typically spread any shortage over the following 12 months. Or you can pay that shortage in a lump sum so that your payment does not go up. But yeah, there are your escrows and your aggregate adjustment.
Ron has a question.
Good morning, Ron.
Good morning, Sarah. Good morning, Linda and Tim. I just want to emphasize, this is a great training, by the way, but you had talked about why the CD, and you use a great term, Sarah, is not gospel when we initially issue it. And it's because of all the things we've been talking about on this page here. Here we are, moments before closing, and things are changing. And that's why when we initially issue the CD, at least 3 to 5 days in advance, we're locking in our lender fees up top, section A and B. Those are locked in, but really all these other sections can change up until the time of closing. So that's why when we issue that initial CD, that's a ballpark number, and we don't have the final number yet. So just wanted to make sure you emphasize that.
Good point. Very good point, Ron. Thank you. All right, looking to see what else we have on our list. We talked about repair bills, home buyer's warranty charge. We want to make sure that if the seller is paying for that or if the buyer is buying their own. I was sitting in a sales meeting this week and Cheryl Powell was on saying that they're now doing monthly payments. So if they want to set up a monthly payment for a home warranty, that's something that they can also do, which I thought was interesting. Okay, confirm resale disclosure information for homeowners association, condos, and PUDs. Sometimes there's more than one. Sometimes these condo associations actually sit in a homeowners association or a planned unit development. So that's, Linda, you want to touch on that for a moment?
Yes, and on your contract, I always go to your contract to see that you've checked association, or if then you've checked condo, but there can be 2 association packages that we have to have that the seller has to provide. And there also is the same thing for the condo. So you want to make sure when you have these people going into associations, they are aware that there's more than one, that they are going to have 2 separate dues, and that we have to collect for both association packages, both setup fees for the associations, and then any delinquent dues or any dues that have been paid. And that is where Ron is saying that in this H section is where it's going to change what they were told initially of how much money they bring to closing. And like right now, if I did a closing today and it's a condo, I would already be collecting for the May condo dues just so they wouldn't be delinquent. So you want to always make sure whenever those are due, but we have a hard time getting these association disclosure packages. And remember, the buyer has, I think it is 3 days to review those documents to decide if they want to go through. So the sooner you get those disclosure packages, the sooner you have it. What I'm looking for is the resale disclosure part of it. I don't need the 150, 200 pages that goes along with what they get, but we must have those. And can you waive that? That I would always say you talk to your broker, because as far as I know, the buyer cannot waive getting those disclosure packages. They have to have time to review them.
Good point. Good point. Okay, the next one is really more of you too, Linda, where it says confirm prior to closing that the commission splits are correct.
That is correct. You guys, that's the most important thing for you guys to be looking at for personally, is that we're collecting the proper amount of commission. And there is that special broker commission form that needs to be completed on the top and also on the bottom, because they'll say 3% to the listing agent, but you never fill out the bottom part to tell me is the commission 6%, 5%, 7%. I need to know what that figure actually is. And I also need to know if you are going to be the one deciding you're going to pay for the home buyer's warranty, or you've done a military advantage or any of the special programs that Berkshire has. We have to know that of how to take it out of your commission. And you can't do anything without with your commission for repairs, warranties, or anything like that until your broker approves that. I always advise you to make sure the brokers approve what you're doing with the commission, or it's going to be your deal all the way through. But one of the things we do have that problem with is the military advantage, the doctor's program, or any like that, because that has to appear on the closing statement as a credit to the buyer, and relocation and the mortgage company must look at that so that we can make sure we've collected the proper amount of money to give the buyer the credit for. And Darlene, you may want to say something about that.
Sure. Yeah, we have forms in place that, we can help you fill out for the military advantage and also for the Right Move program. It's very important that, Linda, as a settlement agent, knows in advance that this is what the deal is. Because if we have a buyer and how somehow it does not get on the CD, we can't give them that benefit, because that would be a RESPA violation for us to do something outside of the four corners of the closing statement. So it's really, really important that we know to be able to help you. And we try to target, to put our calendars to try to see if we know of a right move or a military advantage that is through our department. We like to try and make sure that, we fill out the forms and give them to the agent. If Linda is the settlement agent and we know that, we'll go ahead and send it directly to her. But sometimes we don't know who the settlement agent is going to be. So it's really, really important to make sure if you're going to give that benefit to your buyer, it really has to go on the CD, and there's no way to do anything any different.
Right, and the mortgage company has to also see that, because that means we're changing the closing statement and giving a credit on that third page, and the lender has to approve that also.
Correct. It is subject to lender approval.
Correct.
And I know we're not in the era of seller paying closing costs right now, but when that does turn back around, when you're giving that credit to the buyer, make sure when you say seller paying closing costs, you take into effect that credit also showing on that settlement statement, because under terms of the loan, sometimes the buyer can only get so much credit for closing costs or so much money back on the bottom line.
True.
Very true. Good. All good points. Thank you all very much. Okay. The other thing on our list of questions was about not relying on the lender or the settlement agent to hold escrows, and we touched on that briefly. We don't like to hold escrows, and there are multiple reasons for that. A lot of times, if it's for termite or moisture damage, we don't really know what the extent of it is. An estimate is just an estimate. And even though when we have escrowed in the past, we escrow 1.5 times the estimate, it's the time of getting the repairs completed and the actual cost are two of the main issues with our holding escrows. So just to let you know. All right, on this next page, we have calculating cash to close. This is a very important section because your final should be, and this is the final cash to close, should be less than the loan estimate. And if not, that's something to definitely review and make sure we know why they are different. So I encourage you to look at that page too. And then we just go into this part sort of looks like the old HUD 1 statement, where it basically just gives you the summary of the transaction. Just kind of goes in there, talks about seller credits. Here you can see on this one, the seller is paying some closing costs, $2,500 on the seller side, and the $2,500 also rolls over here to the buyer side. And then I think the other important thing to notice on this form is here are just some other details about the loan. But right on this last page, this is something to be really cognizant of, that on this little section right here, not only does it have the lender and our loan officer's name right here, but it's going to have your name as the agent, as the listing agent, as the selling agent, and the settlement agent. In the olden days, it only had the settlement agent on there. It had the lender, but it didn't say who the actual loan officer was. So your information is in here for perpetuity, and I believe it's usually Barbara's name as the principal broker, but it's just important that you know that somebody can track down who was the real estate agent on this transaction. So I think that's pretty important information. Now I know Ron is on the call. If there's anybody else that has any input or there are any extra questions, please let me know.
I want to say something, Sarah, about when you had down what the cash to close at the bottom of the page 3. That money must be a cashier's check made out to the settlement agent and the exact amount, or it can be wired funds. We will not and cannot take a personal check. So that's very important. They can't walk in with a checkbook and think they're going to pay $14,000 with a personal check, because that doesn't work. We have to have money that's we can use the same day we're going to put it in the bank.
Good point. Good point.
All right, we have a question in the chat.
Okay, great.
Can you go over the rent back / possession agreement, how it should appear on the CD? Do you require that document? And then there's an additional comment. My buyers may have lost houses to other offers that had rent backs that exceed 60 days.
Well, let's see. Linda, can you tell me where it goes on the settlement statement?
We don't put it on there.
There we go.
Most lenders will not allow the rent to go on there unless it's investment property. If you've done investment property, then we can put the security deposit and we can put the rent on there. If it's a regular loan, the lenders do not allow it to be put on there, and it has to be handled outside of closing. Then the question comes up, who's going to hold the security deposit? It's not going to be me. It usually goes to, and then that's where the brokers are going to decide who holds the security deposit.
Well, it's not going to be the broker, I can tell you that.
That's correct.
Yeah, see, but we are having a lot of that right now. There are lots and lots of people having possession after closing.
And
So-
Sarah, do you want to address the 60 days for the loan?
Yes, so from the lender's perspective, your agreement with the lender is that as the buyer, you will, if it is an owner occupied, as Linda said, if it's an investment property, that's a different matter. But you, when you're going with an owner occupied loan, you are going to occupy the property within 60 days of closing. The only exception to that is if it's a VA buyer and perhaps they don't have orders to this area until 90 days from now, that would probably be the only exception. Ron, I'm not sure if you're still on, if you have any other thoughts about any other exceptions, but technically, and an underwriter, if they see a possession agreement that it's going past the 60 days, that is going to cause, an issue. Again, unless it's a VA loan and we have evidence that the veteran is not going to be here for some delayed period of time.
Yeah, you're 100% right, Sarah. I would just point out that the lenders, we as a lender, we're not interested in your PICRA nor your rental agreement, preferably. So kind of keep us out of that and handle that thing, as Linda said, outside of closing for your best protection. There are no owner-occupied police. However, mortgage fraud is you don't want to be involved in that at all. So, you got to kind of do things the right way to the best extent that you can. And I know it's tough out there, but the rules are the rules.
Yep. Ron said what I was going to say, fraud. Anything that goes beyond that from a possession agreement standpoint is helping perpetrate fraud. So stay away from those things 100%.
Good, but great questions about the rent bags. Are there any other questions in the chat, Tim?
No, but Chasen has his hand up, so let's go to Chasen.
I think Anastasia was first. My apologies.
Her hand is down, so we'll go ahead, and if
Okay.
she wants to speak, we'll bring her in next. Go ahead, Chasen.
All right. How are you handling if a person wants to do repairs at first, but then they say, "Hey, I'd rather give you the cash or the money." How are you handling that now?
Who you want me to address it from a real estate perspective as opposed to a loan perspective? All right, so the first thing you should do is you should get an addendum drawn up that says seller to pay $3,000 towards buyer's closing cost in lieu of repairs, and you do that on an addendum. Then once that is signed by the buyer and the seller, you can then send over no repairs request on the PICRA, so that you keep your PICRA in play until everybody agrees on the dollar amount. Once that's all signed off, then send over the PICRA, no repairs requested.
Perfect. Yeah, because I've always heard of the concern of when you say repairs to the lender, it always throws a red flag. Right.
Correct. Yep,
Okay.
correct.
Okay.
You're right there. And I think that's as we mentioned earlier that to use the dollars towards closing costs, because if it's not a repair that was required by the appraiser, then that's something that you can certainly do it by just increasing closing cost paid for the buyer by the seller.
And we need to see that ahead of time and not at the closing table.
Yes. And I think new construction is probably the biggest culprit of this, with addendums that we don't know exist that change sales prices and things. So if you are working on new construction and you do have typically there's a series of addendums, just make sure that we as the lender and the settlement agent is receiving all the addendums that come along that refer to the sales price or any financial situations of money changing hands that need to be addressed on the closing disclosure.
And on that, from a new construction perspective, I've seen a number of times where an agent goes, oh my gosh, I didn't realize my clients were still talking to the builder or the agent and adding on this, that, and the other. Well, that means you haven't been talking to your client and or the site agent on a regular basis saying, hey, just checking in, make sure everything's going fine, no additions, no changes going on. So yeah, you need to stay in touch with your clients, at least on a weekly, every other week, to make sure, hey, have you been out to the site? Have you been checking the progress? Oh yeah, we were out there and change the cabinets or things. Oh great, is there an addendum? Right, because those things go flying around and you don't even are aware of them. So make sure you're staying in touch with your clients on those.
Exactly. Great. Is Anastasia, did she come?
She's
up
got
with
it.
a
Yeah, she's
question?
got her hand up. So go ahead, Anastasia. Anastasia? She's got her mic unmuted, but it doesn't seem like maybe we're hearing her.
All right. Well, it looks like Jay may have a question in the meantime.
I do. We've seen some creative ways of doing things lately, including some credits back to buyers and credits back to sellers that always raise red flags for me. And I know they do, Linda and Sarah, for you as well. Can you talk a little bit about how those are best handled so that agents know when they get into a situation like that, how they can deal with it?
Well, give us an example, Jay.
Okay, so happy to. Had one this week. Agent needed to pay $5,000 to a buyer for an error that an agent made. And so there was discussion about, do we do this on the HUD or do we do it separately from the HUD? And essentially the agent and the buyer had kind of messed up on the escalation clause. And there was a $10,000 gulf that the agent and the buyer decided to split to make up for the error and get the seller what they expected to get. So the buyer, we didn't handle our title company did not handle the closing. It was handled elsewhere. And the buyer said, all right, I'll pay $5,000. Agent said, I'll pay the other $5,000. Question is, should that agent's $5,000 go on the CD?
Yes.
That's what I thought, and that was my ruling as well, and that's what we ended up doing. But there was a lot of discussion from another title company that, oh no, we don't want to do that. And I said, we absolutely do. Got to show where it's going.
You also have Barbara, who has all the rules. She and no one says anytime anything like that happens, it must always show up on the closing statement, just like our right move and the Military Advantage, but they don't get paid. They don't do anything outside of closing, or you're in major violation of RESPA.
So is there any circumstance under which any kind of buyer or seller or agent credit does not go on the CD? I know that's a loaded question.
I would say from our perspective, no. I think that's going to be between you and Barbara Wolcott as to how that would work out. I think that's, I mean, we haven't, the closing disclosure is a financial accounting method for the finances that are changing hands on the transaction. And we would anticipate that we would be provided with all the information that we need to put on there, because as Linda said, one, it could be in violation of lines, I think it's 652 on the contract. It's either 652 or 642 that says there are no other agreements between the parties. That's one of the items that you need to watch out for, and also RESPA, that there's nothing that's inducing somebody to provide a real estate sale, transfer, referral.
Thank you.
But I think I think we do have some new people on today, and I think there are two items that I would like to bring up. One is that we have seen, and haven't seen it for a while, but it's out there, that when you ask the seller to pay closing costs for your buyer, make sure that you are specifying how much that seller is to pay. For a while there, we saw a number of seller agrees to pay 3% of buyer's closing costs, where they should have said 3% of the sales price or the loan amount, or $3,000. So I think that's one of the things. And the other one, which I'm thinking, Jay, may be the origination of yours, which I saw another one of these yesterday, where, and Tim's very good at this language, that when the buyer is going to guarantee that they are going to pay in excess of the appraised value, not to exceed the sales price. We had one yesterday where an appraisal came in high, and the wording on the contract was that the buyer would pay $15,000 in excess of the appraised value. So you had a sales price at $520, appraisal came in at $530, and so now the buyers are going to have to pay $345,000 for that house, which is not what anybody intended. And one hopes that our agents are all nice enough that they might say, is that really what you meant? But once it's in writing in the contract, you're sort of stuck.
Yeah, and I want to put in there with Sarah, I just had a conversation with an agent the other day, and they had put language for the bottom and to protect the seller, and the other agent, the buyer's agent, said, no, we're not putting that in there. I said, well, then the seller's not signing the contract. Because if you don't put a bottom and the seller agrees to sell for $15,000 above appraised value, what happens when the property appraises $50,000 less than list price? So you have to have the bottom in there as well as the top to protect the seller when you're working for the seller. So you have to work both ways. You got to protect the seller and the buyer both ways. Otherwise, you're going to get left out in the wind one way or the other and bring $5,000 to the table, as Jay just referenced a few minutes ago.
Right, because that's what they do. They look to the agent because they think the agent has the deep pockets.
Correct.
If they're not looking to the lender, because we usually get looked at too.
Yeah.
But the lender didn't write the contract, so you're safe on that one.
True
And
dad.
by the way, the company didn't share in that error. So that was all on the agent.
Wow.
Wow. Also, I want to clarify what Sarah said about buyer's closing costs when you're writing that in the contract. Also, make sure you put in their prepaids. So put closing costs and prepaids to be used at lender's discretion. And that way, both of them will be covered and not just the closing costs.
Very good point. Very good point. All right, Chase, and I know you put your hand up, but you took it back down again. Did you have another question?
Yeah, I didn't want to ask too many questions, but so I'm in a situation now where the buyer's agent didn't receive the full credit for the PICRA, and they're asking for the credit after closing. So, and I heard about the RESPA, and I was curious about that conversation because that's going on right now for me.
Yeah, I talked to Regina about that.
Absolutely, will do.
Yeah, because technically, once it's closed, it's closed.
Correct, and they keep contacting me pretty much every week. So I'll talk to Regina.
Yeah,
Yeah.
once
because
once it's
I think-
closed, the contract dies unless specific verbiage says this shall survive closing. If that specific language isn't there, it's done dead.
Fair enough. Thank you.
You're welcome.
It looks
All right,
like
any other-
Regina's on, so I'm sure she's heard.
She's probably calling.
Yeah.
Any other questions, anyone? I know this one is much longer than it has been. Sarah is writing a class with Linda for 2 hours, right? Is it 2 hours you guys are writing on this, Sarah?
Yeah, I believe it is.
So there'll be a longer version which we'll be putting out sometime late summer, early fall, so you can get CE approval, and we're trying to get a couple of PLE credits there. We'll see if we can work our magic on that as well. So thank
And
you all for being with
Next
us.
month, commercial for next month, Linda and I are gonna do assumptions because we think with the interest rates increasing, there may be some assumable loans out there. We want to make sure you have all the facts.
Okay, so assumptions next month on Thursday or Friday. Do you know which day it is? Do we?
Are you asking us?
Oh, I didn't know if you'd already set it up already.
No,
Yeah.
no.
Okay, I know I saw emails on it. So, and Chase, and I just saw a message come up. I don't know if you saw the message pop up, but it was from Regina to call her when you hang up with us. All right, thank you,
Will
everybody.
do.
All right, thank you.
Have a great day.
Thanks, guys. Have a
Good
great
weekend.
weekend.
If you're
Bye-bye.
joining us, I'll see you in a couple minutes for showing rental property over on the next link. Thanks, everybody.
All right,
Thank you.
Thanks.
Bye-bye.